Yeah, it's difficult, but I think from a credit perspective, we've still got plenty of space here. We could see good performances from a lot of the banks, not necessarily on earnings, sure, but I think from a credit quality perspective, there's lots of attractions. You could get Deutsche Bank you were just talking about there. They've got bonds around with yields between 10, 15, and even up to 20% that we quite like from here.
What do you make of the outlook, though, from all the extra stimulus we've seen from central banks, even those that were not in negative territory and built up some ammunition, now moving back towards zero interest rate policy, the likes of the Fed, question marks around whether some of that have never contended with negative rates may have to go negative. Does this impact margins right across the board?
Yes, it does. And it is a concern for equity investors. And it's one of the reasons I think the whole sector's been under a lot of pressure. Really for some time now, way back. I was looking this morning at the relative performance of equities versus the riskiest part of credit for bonds in the banking sector, and there's been a massive outperformance from the bond side, and actually I think it will continue. So yeah, you're going to get net interest income under pressure, net interest margins under pressure, you're going to get squeezed down on costs, but from a credit perspective, they're still very sound institutions.
Luke, very good morning to you. Are we being a bit too glib about the survival of the banks as a broader sector as well? Of course, it was all we talked about from 2008 to 2010. And then some banks were allowed to go on both sides of the Atlantic. Other banks were forced to merge, hence like the likes of Halifax Bank of Scotland as well, or Lloyds with that group as well. Do we think that some banks will be A, forced to join forces, or B, will be let go at some stage? Bearing in mind that the depths of this crisis are more likely the depression rather than the GFC.
Yeah, so it does kind of depend on your expectations of how bad this gets. And certainly our worst case scenario are using the D word, that depression scenario. And in that case, it's going to be really hard for every single institution to survive. But that's not our central case. Our central case is actually the banks have spent 10 years getting their capital position a lot sounder than it was pre-GFC. CET1 ratios are incomparable now to where they were then. However, I think we do get a round of consolidation when all of this shakes out. It's probably not until 2021, maybe even into 2022. And there'll be winners and losers within that. But it doesn't seem right now as if governments want to let banks fail anyway. They're the policy tool to help the economies out of these problems.